Okay, Lucas, so we didn't have the meeting yesterday, but I thought maybe I would record a quick video about what I wanted to touch on yesterday. This is mostly about thinking about you and the issues that you were having, but I mean, it's relevant to myself as well, and I would presume to Lot as well. Um, and it's just going over a little bit which is why we are, um, why we should limit ourselves to trading setups, to trading technical setups, right? And that's kind of difficult to do when we're trading NQ because in NQ, in order for you to see a technical setup like setting up after the open, um, it's just, it's just difficult. It's just difficult for that even to happen. And you can't really trade very low time frame technical setups on NQ because of the way it moves. So what we've been doing, at least the way approach that I've always had is like, okay, so I'm just scalping off of the tape, scalping a little range, and then that's what we've been doing, right? When we break a level to the downside or the upside, then we switch over to momentum and we scalp on the way up. But it's not really like a technical setup that you can visually see, uh, basically a higher time frame technical setup, which are the ones that have edge. Um, arguably, there's a, arguably there are they do show up and um this one that lot um did a write up on from Friday as an example, right? Like this is kind of like clear, but you still have to like zoom out, stop being lost in the noise. In fact, if you are limiting yourself to just trading a clean technical setup, you wouldn't be trading this at all until you see this, until you see basically, I mean, what's the setup here? I guess you have the trend line here, and then you're watching it closely, and then you watch it, fake out, come back down, trap, and then come back up, reclaim that VPOC, and then you see a little bit of structure above the VPOC. You wouldn't be, your first trade of the day wouldn't be until you get to here to trade this setup, and that is it. So it's different from the scalping that happens before it actually sets up, which is something that we've been doing in Cube when it is conducive to that, but it hasn't been conducive to that lately. We haven't, at least from my perspective, we don't have that clean tape, those clean exhaustions or whatever. So it can't be traded. It can't be scalped like that. But here we had a clean setup. And when we are trading oil right now, because oil is in play, right? It's a different story when it's not in play. But when it is in play, we have clean, first of all, we have clean directional moves, even though they look quite choppy, but even within those directional moves, we have, clean setups that we can trade. And and we're not scalping in and out. We kind of are, but we are within a technical setup framework that makes it a lot safer and a lot easier if you are trading it well. So, um, Um, we can go back into some of the basics on we're supposed to be trading well these things, and touch on what we started talking about on the last meeting. But before we even do that, I just want to go over an example of how, for example, you would have made really very low risk, reliable P&L on this day, for example, just by identifying the setups, right? So, um, let's, let's, like, I think we went over this. This had topped out here. We had this trend line here, breaks below trend, chops around, double top here, And then we go and then also depends on what setups you have on your playbook. A lot of people will have this setup as a playbook setup where they see a double top after a rig of trend with a flat VPOP, VWAP, um, and double topping into basically highs of a previous of a trend up, and that's a setup that they short all the time. So this would be a setup for them, right? Perhaps. However, they execute here. The guy that I used to trade with, that crazy guy that used to be an Axia trader, that was his favorite setup actually. He didn't even have he just shorted up here. This guy that has a big account, he can take a lot of risks, so he's like he just shorted, bam, and it went against him, and he just held until it worked or it didn't, and he would short. That was in his playbook. So so far the setups that we have worked on together, at least, um, they don't include anything like that, and we can end up including something like that, right? Um, we have to refine. This can be worked on, right? This is a break of trend here, right? So this could be a trade that can be taken if we define it as a setup with a set of rules. But just imagine that we don't have that right now. These trades here, they were all, when I took them, they were all scalps. They were just fading, fading flushes, exhaustions, because, this thing was, the tape is easy to read on these, and all of these, I just identified a pattern where all of these exhaustions were actually, bouncing with a lot of range, so I was checking that. But those are not quite setups. But then when do we get the first setup? Clean, reliable, identifiable setup. Um, I believe it was this one here that we were actually trying to trade together. Um, um, the elements that go into this setup are kind of convoluted or kind of complex and not so like basic. So visually, it's not as appealing, but it was a good setup because it was reclaiming the anchored VWAP, because it was creating structure after reclaiming this 9450s VPOC. Wasn't perfect in the sense that it actually failed, but then it got soaked up here with volume. We talked about this right off of that 94 level, and that's what made it a good long here. Um, but maybe we can choose a cleaner setup like this one. But and actually, let's not choose a cleaner setup like this one. Let's just stick on with this. With this one was with the one that we're kind of familiar with because we already talked about it. And let's talk. And let's just. I'm going to go back to a 5 second really quick, and let's just kind of calculate. Because it's a setup that we have rules for. Part of the rules obviously are going to be like what is going to be your risk reward, how much are you risking, how much are you expecting to make, um, based on the expectations of what the range is going to be, right? So let's just describe really quick why this setup we were even taking it, right? And this was like we had bottomed here, basically. We were in a downtrend. Each of these flushes were being soaked. This was being soaked. This was being soaked. This was the biggest soak of all, with the strongest price capitulation here and the biggest, the most amount of volume here soaking that volume. And then it's basically a clear reversal because we start making higher lows after this soaking, right? Um, Another flush, soaked, but higher low, this higher low, bam, soaked, and it keeps going up, right? Um, the the um, the basic principle behind the setup is that this is a reversal, a backside reversal that is now drifting back up into VWAP, and then VWAP is always going to be the um, target. And we have, even though it doesn't look very clean, but we had some structure being created within reach of a pop into that target area, and we're already in a trend upwards, as ugly and choppy as it may look, but that's what it was, right? And that's why this had edge. So the fact also that VWAP was not just the target because it was VWAP, but it was the 95 level, which was, if we go back to a 1 minute, it was a clear, very valuable area. Sorry, down here, on the profile. And it had been, from earlier. Here it is, right? It was super strong. Like 95 was, um, during, especially the day prior. It was actually the most important level, always, at all times. It was the strongest VPUC. So that was, a very key level. So that key level was basically right there aligned um, with VWAP. That was going to be our target. Um, and that was the target because we were coming back from a backside exhaustion and now a reversal, making new highs and drifting up back upwards. And then the other things that gave this setup a lot of strengths was that we had an anchor view up. Then we talked about this, and this anchor view up, we had anchored this on the day that it broke out from this technical breakout. And we have reclaimed that anchored view up here. Um, is that the setup that we're talking? No, we have reclaimed it here, sorry. And and then we have that gives us, and we're creating some structure compressing against that anchor VWAP, which is giving us even more edge for a breakout pop into that target area that's literally just above us, right? So that's why this little scalp had edge. So in fact, there was a lot more edge than that. Well, we should talk about this also. It was not just, we actually had reasons to believe that this had trapped a lot of volume throughout all these events here. And we had reasons to believe that this was actually, that had fuel to squeeze up all the way basically into 100. And why is that important in terms of defining the expected value and basically the strength of this setup? Because, and I like making analogies, and this may resonate with you or not, but if you ever done like a martial arts or something like that, or if you ever fucking seen a Bruce Lee interview where he talks, whatever, um, you know that concept where if you want to punch an object or a thing or a person, I guess, um, you want to imagine like if you're gonna punch, if that object is like 2 feet away, you actually want to be trying to punch a target that is 5 feet away, so that this person that's going to end up poor or person that's going to end up being punched is in the trajectory of a larger move, basically. So you want to be aiming for way past that that thing that's going to be punched because, well, I don't know that it makes sense, right? So that's the momentum is going to be. So it's like you're not, the end of the move is way past the thing. And this is kind of the same concept. So if you have something that on a larger time frame is setting up and has enough power and fuel and enough trap volume to make a move up into a target that's much higher above, in this case, a 100 area. It didn't really get there. Um, if you have reasons to believe that that's on a higher time frame, that's setting up, then this becomes just a tiny fraction of that move, and it makes it even stronger, even stronger because people are positioning for this larger move. So it's This is almost like a like nothing. It's like a given. It's like a you're like sneaky. You're like, okay, I'm just gonna take this bit and I'm getting out before anybody's even thinking about getting out, which gives it a lot of edge, and which means that you can actually size this fucking 10x because it's super safe. um, Whatever. So those are the I guess the all the variables that I think are stacking up for this particular little setup. It's just a scalp, and it's a what we call a move to move. It's like from here to here, and that's it. That's where the highest EV, highest probabilities, everything. That's the part that you can size, you know, aggressively, right? So um, that being said, if you wait for a setup like this to show up and then you trade that setup, and let's go back to the 5 second, um, um, then because you have rules for your exits and your for entries and your exits, and you have rules on how to size these setups and all that, then you can calculate, get really tight with your risk and calculate what your risk reward is. And let's just do that exercise right now. And let's just imagine I am just going to go with um, my daily risk. So my daily stop is $1,200. So, and I because I'm just gonna go with mine because I forgot what is yours. I think yours is $400, but I can't remember. So let's go with $1,200. And actually, let's round it to $1,000 just to make it a round number and easier to calculate. So let's say that my daily stop is $1,000. So that's going to be my risk for the day, $1,000. So $1,000, I'm sure you've seen this formula out there. If you haven't, well, it's a good idea that you know it, which is, R, right? $1,000 is your risk, R for risk. Um, and people always, they should at least, their P&L for the day is always expressed in function of R. So today I made 1R, or today I made 1.5R, or I made 3R, or I made 10R, or I made 0.5R. So I kind of know already that on just average when I'm trading well, I'm not losing. I don't have losing days. My average winning day is going to be around zero point 0.8R. Sometimes it's 0.5R, which means sometimes I make $500, sometimes I'll make 800, and there are those days when I make 1.2R, 1.3R, maybe I make more than 1,000. But typically that's like the norm, like 0.8R is like a normal good green day. Okay, so um, we know that our risk for the day is $1,000. So when this thing is setting up like this, it's chopping up around here. Remember that we're trying to buy the dips here. This is obviously, look at this. It's not even clean. Like we have a trend line there that was not respected. So this was a little bit different, not as clean. The technical pattern in itself, the visible, geometric pattern was not perfect. So, um, but we knew that this was basically, maybe we can move this trend line over here, and then, you know, that was sort of like it wasn't very tight, but we had some consolidation here basically, and then, it started breaking below the trend here. Okay. Um, in any event, we do determine that this little flush here, um, flushes into 94, the low 94s. Actually, it was so it made it to 94.02. But we could see basically just based off of action on the tape that this was our entry. And we're seeing the exhaustion here, and this thing we were seeing it as a break below the bottom of this range, but then a trap here when it gets soaked here in the high and the, the whole number, and then back up it goes. It's going to break through this. We have anticipate that this is going to break through the trend line and then head up towards target with momentum. So all these things, whether they were very easy to see or not, point is that we have let's imagine that our entry was, it was a little bit maybe not as clear at the time when we were looking for this to go up, but let's imagine that this was like the obvious entry and we knew that this was gonna we were gonna enter. So when that happens, um, you know that your entry is here and you know that you had a target basically at 95, and you're gonna be holding this up all the way up into target because we are very close to that target. The way to manage this trade that we're going to be holding it into exhaustion, and we do get some exhaustion here into 94.80s. Maybe we take some off there, but we don't get the final exhaustion as expected until it gets here in the 95s. Actually, overshoots by like by by a few, by actually a lot. Um, no, but we get the first exhaustion here, I guess. So 95.05, it overshoots by a little bit, and it's touching VWAP there. So that's where we would be taking it off. So we have two events there where it's like we're probably taking some off. Maybe even this one here also forces us, or to react and maybe take some off as well, because these are all little exhaustions. But we should have conviction because we know we have a hard target here that's within reach, and as long as we see that momentum, every time we get these exhaustions that we see it trap and we don't see it pull back too much, then we stay in. And I mean, if we look at that, this is where that 1 EMA, sorry, the 9 EMA on the 1 minute comes in handy because, maybe if we are basically trailing our trade after it takes out that trend line, that 9 EMA keeps us in the trade at all times. So, dude, I'm sorry if this is taking so long to set up, but the point that I want to make is this. Um, that's just a little piece, a little pocket of edge because it's a setup that we can trade, that has a lot of edge and we can trade with very little risk and we have, very good reward. It's a very small one in a chain of many of them in a row, back to back. All these, we can go through the price action all over that day, and we'll find little instances where we have little setups. This one has even way more edge than the one that I'm describing. I'm just going over the one that I'm describing because that's the one that we're familiar with. But this one had way more edge, for example. Not just way more edge. Like this was a much cleaner setup. You can see it. You can see how clean this is. You can see this super strong VPOC here and super clean, super, very, very good, pattern and, the length of the consolidation. And then there are other reasons for us to believe that this was going to hit target here in the hundreds. And then obviously it's also a much better setup just because of the range, right? Because this is like goes from 96.80s to, I mean, it's almost 4 points, almost 400 ticks. So, but let's not, and there are many instances here of edge. We're just focusing on the one here that we're taking. Um, so when we have this thing set up the way it did, and we have such an obvious clean entry, what is your risk here? What is your risk here if this was the very most obvious entry and it is actually confirmed by soaking in the tape where we're seeing the exact moment where we're getting that, price acceleration, sorry, that tape acceleration and that price capitulation into that. Like the way we've been scalping this, for example, there is very little, I mean, this is it. It's like we have because we're able we've refined the skill, the ability of actually entering against bursts of speed on the tape. We can get very, very precise with this. So I would say that it's fair to say that we could, you know, take this trade and risk 5 ticks. Absolutely, it's 100% probable that we can get away with that. But then let's just go ahead and double that and say that it's 10 ticks. So if that gives us plenty of room, and there's always a possibility, obviously, that we enter, it doesn't quite go, we take a paper cut, and then we enter back again. And in aggregate, let's say that all of it ends up being 10 ticks of risk. So it doesn't look like a very clean setup in visual terms, but it is a very clean situation here for the entry because of the strength of the exhaustion, the outside volume candle, the fact that it's exhausting into a whole number. So for many reasons, it is actually a pretty clean setup in those terms, even though if it's not visually like that. So um, we can confidently say that we can be risking no more than 10 ticks on this um, trade, and we have a potential range that's because of the everything that we talked about regarding the setup. The chances of this making it to target are just insanely high. So we have a a trade with a range that's pretty much guaranteed of 100 ticks. And of course, we will be trading this with caution, and we're human, and we get anxious, and then we're going to be probably taking off some of it into this exhaustion and this exhaustion. But even if we do that, the point is that the whole move, we know that this is going to be a 100 point move, and we're risking 10, 100 tick move, and we're risking 10 ticks. So that makes it a 1 to 10 or 10 to 1, whatever risk reward trade. If we're risking 10 ticks, it's more than that because we are just being extremely conservative and extremely safe with that 10 tick risk that we're calculating because we could be if we were this is pushing it, but if we were like super, if we push it to the tightest point that we can, we could get away with just risking 5 ticks on this, and then it's like a 1 to 20 risk reward trade. So but it's not. Let's not go there. It's a 1 and 10 to 1 risk reward. Um, all right. So then let's go with sizing, right? Um, um, lately, at least when we've been scalping um, NQ, you can't really get this tight risk reward. Like you're always maybe risking a little bit more, way more actually. So I've been trading those scalping the open and Q. I've been putting on um, 2 micros per lot, and I've been using 3 lots. That's basically my thing, and that kind of keeps me within. So on every losing trade, if I cut it fast, I lose $200. Maybe I lose $300, knowing that then on the next one I can make it back and so forth. It's it's pretty like way too loose, and most people would think like that's kind of like too much. But well, that's the way I've been sizing. Um, if I size this the way I've been sizing those, and this is a much cleaner and again much tighter easy way of managing and much tighter risk. Um, let's imagine that I'm using the same size. So That would be 2 micros per lot, and I'm putting on 3 lots at the beginning of the trade. And I'm putting on 3 lots because with the expectation that might be getting some of it off into these exhaustions. Okay, so in oil, 1 micro um, is $1 per tick. Every tick is $1 if you have 1 micro on. So because if you have one full contract, every dollar is 10. Every tick is $10. So um, if you have 1 micro, it's $1 per tick. Okay, so if I open my position here with 3 lots, that's 6 micros. Let's not take into consideration that I'm taking some off during the move, but if I size it with 6 micros, um, that means that this whole move makes me, um, I guess, $600 because it's $6 per tick and it's 100 ticks. So it's $600. But let's imagine that I'm taking, again, taking um, 1 lot into this exhaustion. So then we're getting from 94 to 67. Here I take off 1 lot, and then the other lot, maybe I take it off into this exhaustion, and then I leave that final lot for the exhaustion into target here. So then that $600 maybe turns out to be only like $450, something like that, maybe 500, who knows. So I'm not going to do the math right now, but point is that this little trade here alone, sizing in just normally, just uh, um, with 6 micros, makes me around zero point 0.5 R. So I make half of my risk of the day. But again, why do I have to size this so low if this is a trade with so much hedge? Um, if I put on 6 micros here, I am basically risking $60. If I'm risking 10 ticks, I'm risking $60. Now, my risk is $1,000 for the day, and it turns out that I believe that this setup is an A plus setup, even if it's just a small scalp. But it's in my book, this is A plus, especially because it's very low risk. So why am I going to be risking only $60 on this trade? And this is where we go to okay, so when you get an A plus setup and you're sure that it's an A plus setup, or an A plus situation, doesn't, because people, when they think about A plus, they think about, oh, the trade that's going to make them, that's going to make the huge move, and okay, that's fine. But you can consider a little, this is like that little micro scalp easy money trade that is an A plus in that sense because it's an easy money trade and it's so low risk and so high probability that you just take it. Um, um, so why would we be sizing that only, like why would we be, sorry, risking only $60 if we have $1,000 daily risk? This is a trade that if you have $1,000 daily risk, you should be risking at least $200. Risking 20% of your daily risk I mean, a lot of people would be risking half of their daily risk here, 50%. And that's not reckless if it's really an A plus. Without going to that extreme, it's okay, it's fucking perfectly fine. You can go out there and talk to people and see what traders are doing, putting on 20% of your daily risk on a trade, on a move that has very, very high win rate and very low risk is actually the right thing to do. Like um, any less than that is actually it, to your detriment. It makes you a shitty trader. So if we put on $200 of risk here and we're risking 10 ticks, um, that means that you should be putting on two contracts or 20 micros, which happens to be on the account that I'm trading. That's actually the limit. I can't put on any more than that, which is the other stupid thing about this eval. But um, so this would grant that on the current setup that the current eval rules that I have, I should be putting max size on this. I should be putting on two full contracts, and it's no big deal because it's only 20% of my risk of my day. There's no risk here of blow up. There's no risk of stopping out. If the trade doesn't work and I get stopped out, okay, I lose $200, but it's totally fine. It is worth taking this risk. Um, and if I do that, I make $2,000 on this trade. If I hold the whole position up until here, we talked about maybe that we're taking some off here and some off here. Okay, so maybe I don't make 2,000, maybe I make $1,500. That's already 1.5 R. That's already, well, the daily base hit that I'm allowed to, the cap on the profits on the eval that I'm doing right now is $860. So it takes me way beyond. It's almost double. So I can't even do that. I have to, cut the trade short or whatever. But the point is, if you don't have that restriction, if your risk for the day is $1,000, you make 1.5 R just on this little trade without risking much, only risking 20% of your um, day, 20% of your daily risk. Imagine another scenario. Let's imagine that when this setup shows up, you've already made $500. So you're up $500 or $300, whatever it is. Does it make sense to size this only with 20% of your risk if you are already up $500? Probably not. Probably not because you're up $500. You're already past that point where it's a risk. This trade becomes basically a risk-free trade in terms of your day. It's not gonna be a losing day if this trade doesn't work. So you can actually size this double. Instead of putting on two contracts, you can put on four contracts. You can put on five contracts and basically risk your daily P&L to that point. And if the trade doesn't work, okay, you're break even. It's not a winning day, but it's not a red day either. You could see things like that. And if you do see things like that, then this trade, instead of making you $1,500, then you're making 3,000 or $3,500. Again, that's 3 or 3.5 R. Again, on an account where you only have $1,000 risk. So this is the power of trading setups and understanding what the very specific rules for your setup are. The main value of that is that you get really tight entries where you can really, really dial in your risk reward and maximize trade basically efficiently and maximize the reward if it's a winning trade. And this trade alone would have made us more than three times our daily risk. And now this is where then we go, and when we zoom out and we're like in the context of this whole day, that was this. But then we had this, And then we have this that was basically three times this. And then we have these scalps that are not that kind of setup that we were describing, but they were still very, very high edge because there were trades that were done off of tape and they were very precise. And we also, the range of these bounces were actually larger than this. And then you have a day where if you're only trading setups with edge that you have rules for that are in your playbook instead of like random shit that's just going up or going down or whatever. You're trading very specific setups. I mean, look at this, right? So if you have the potential of making three times your daily risk just here, we'll multiply that by five. And that's how the pros that make a ton of money in and out, day in, day out. That's kind of how they do it. At least the ones that, scalpers that trade low time frames. Um, and that's why it's like it's like with minimal risk, they get really, really tight risk and they can just really squeeze out P&L because they trade efficiently. So that's the power of having those setups, refining those specific patterns. If it doesn't fit the specific pattern, you don't take the trade. You don't trade any of the price action. Sure, you're missing, you don't see your patterns and it's here and then it ends up now being here and you're like, shit, this thing has gone up from 94 to 97 and you feel like you've missed out. No, you haven't missed out. If you haven't seen your setup, then you have no trade. But when you do see your setups and you take your trades, and you can manage your risk and calculate your risk reward and all that stuff that we just did very well. And that's the difference, man. That's what's gonna make you a consistently profitable trader, basically. It's about sticking to those setups. And again, to the same that same argument that I was making before, like that's at least for now, right now, in oil because it's in play and because these setups are actually working because we have the fundamentals behind it and because this is part of a larger move and all that stuff. Um, um, this is easier to find in oil right now because it's in play. These setups back to back within these whole moves, we can find pockets of edge with very, very precise tradable setups that we've already practiced. And this is one type of setup only that aligns with what we've practiced because there are other things that we can expand into the more setups we add to our playbook. So, um, you know, keep this in mind and focus on just finding those setups and they have to be valid setups. And again, the setups work when there is a higher time frame setup in play that's giving it the strength and the direction for the setups to actually work. If this little setup here in another situation, other circumstances, or in a different area of the chart or whatever, it's probably not going to work. So that's where we have to be selective and pick the setups that are actually have edge. This video is already too long. I was going to go into the other stuff, but then we can go that maybe go over this on the weekend or on the meeting um, before the open. And it's about, I was going to go into, like, for example, here we have a clear sell-off, right? A downtrend. And this is actually speaking to you, but also to me, because this is something that I've have trouble with. And when I'm, going over charts and going over charts and going over other stuff, I start seeing things like, using the EMAs to stay inside when we know that we're in a trend to capture those trends. And how to get into those trades, then that goes into the technique that we were literally talking about on the last meeting, which is we get in on pops, on the dips. We don't get on here thinking, oh, this is gonna go. No, we get on these pops. We get on when it feels uncomfortable, when you think the move's over, if it's popping into the EMA. That, for example, here, bam, pops up and it exhausts. It's like, oh, and the EMA is there, bam. That's where you get it here, because then you capture this, that sort of thing. This video is already too long, but I'd like you to watch it before the open today, if that's okay.